All right. Hey guys. Okay, let's give it a moment while we let the others join. Hey Zoran. Hey, hi there. So we are having some technical issues at the moment. So I'll be right back in a while. All right. Hello. Wait, so let me turn on the chat. Everyone can chat here. Hey, hello. Okay. Hello, Arius. Hello, Zoran. Hey, hi there. You guys can see my screen, right? All right, so let me check. Okay. Welcome to another Vantage live trading session. Hey, nice. Good to be back. Definitely. So how was everyone's weekend? Did you guys enjoy yourself on the weekend? What do you guys do? Do you guys do some, back testing on the weekends when you're free? Tiny back tests, just, strengthening your method. Went shopping. Nice. Enjoyable. So yeah, we are back with a new week of trading. New things going on. And yeah, I was just looking at the euro dollar. So there was so much volatility, price was just shooting up. There was no chance for entry. So I did not enter anything. So yeah, welcome to another live trading session by Vantage. Just a very quick disclaimer. Attendees should note that these sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice. And also, Vantage does not guarantee the accuracy or reliability of the information provided. Hey, hi there, Jamilu. Nice to see you. All right, introducing the analyst. Hey, good day to you too. All right, introducing the analyst. I'm sure you guys already know. So I am from yes, many chatting today on Euro USD. All right, I'll get right into it. So many of you already know that I'm from Everest Fortune Group. So this is my chief trader, Desmond Leong. The investment analyst team, we have myself, Yongqing, and Jianing. So for our prop trader, we have Jin Dao. So we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So we have a special partnership with Vantage where we are bringing you guys the good stuff. So yeah, without further ado, let us begin. Okay, I'll get right into your chart in a bit, Arius. So actually, okay, nice, you have sent a chart. Okay, I'll take a look at it in a while. All right, actually today there are not much major news for the euro dollar. Not much major news, no important news for the euro dollar and USD for today. But volatility went in. There's a lot of volatility on the euro dollar. So just now the Asian session. So we are currently in the London session. So as usual, I always tell you guys I like to draw the Asian session out. So I draw out the box. Draw out the box until 12 a.m. New York time. So apparently price broke the Asian session. And then it continued higher, broke. There was no retracements. There was no retracement for an entry. So price continued to break and continued this very, very huge bullish movement on the euro dollar. So what exactly is the euro dollar targeting? Where is a potential reversal target? Potential reversal target, you notice this entire area. It's like a very, very nice, it's like a flat tabletop. This specific area is the buy side liquidity. So very, very nice flat tabletop, price clearing out all the liquidity lying above. So price just cleared that area. But where can price head to next? So if I actually draw a nice slope downwards, okay, I'll just label it out. It's the money sign. So there's a lot of liquidity resting right on top there. So we can potentially look for price to continue bullish, clearing out at least the high. So it's an area we can look out for on the euro dollar. Okay, I'll just draw a quick line. Buy side liquidity. So that area is somewhere we can look forward to. All right. Okay, so let me take a look at your chart first. Hey, hi there, Trung. Nice to see you. Nice to see you. New week. Right. So I already turned on chat. You can actually speak inside there. Okay, let me take a look at your chart areas. So you are looking at the euro dollar on the 1 hour chart. Let me change it to 1 hour chart also. So I look, oh, nice. Hey, very nice, man. Wow. I can see that you are improving. Wow, you are really improving. So price cleared the 38.2%. You actually drew it out. So nice, you incorporated the 38.2% Fibonacci line. Price tap into that, you search for an entry. So you had a buy entry and you took partials upon price breaking. So your blue color dotted lines, are they the partials? So I actually saw that you are targeting liquidity. So it's very good. You are targeting liquidity. So very nice. You actually took partial here too. Same area. Hey, very nice. Very good. So how's your psychology after you have implemented partials? Taking some partials out, you leave the trade running, trade at break even. You feel better, right? Much better with your trade. But that was a very nice trade. I tried to enter. I was looking at it just now. Didn't manage to catch any entry. Because for me, I would like to look for a retracement. So if price breaks, I like to look for retracement before it goes higher. But nice that you caught this. Nice partials. Let me see what else you implemented. Hey, very nice. You are not using. Okay, it's very nice. I saw that you are using the moving average, the blue color moving average line as an indicator that price is reversing, and you also implemented the purple lines. What are the purple lines? The purple boxes. What are the purple boxes on your chart? Are they? Let me take a look. The purple boxes. Oh, nice. You were implementing all the supports. Were you implementing fair value gap? Were you implementing this gap right here? This specific gap. Let me draw out. Were you drawing out this gap right here? Nice. Wow. You are really improving. So I guess you have learned a lot. Really. I just saw you implement fair value gap. You have a very nice entry, tap, partial, and you are aiming the weekly high. Wow, that is a very nice trade you have there. Let me take a look at the weekly. Okay, weekly. Okay, potentially you can aim, you can aim even higher. Towards the 1.05021 area. So maybe you can leave your trade running until the final take profit area. Wow, we are pretty much done on a Monday. Good job. Nice to see. Good trade. All right. Let's take a look. That was a really solid entry. You went through ICT concepts. Very nice. On your weekend, did you go through it? Hey, that's very good, man. Wow, great. Forever improving. Very nice. You have a very clean chart. Very soon, once you go through the entire ICT concepts, I'm sure that, you do not need to, you probably might start to remove the MACD line. Is it MACD? Oh no, it's the moving average line, the blue color line. Wow, you even circled out the liquidity hotspots in red in the circle. Very, very nice. Nice chart, nice chart. Wow, glad to see someone using it. All right. So yeah, actually last week, for me personally, hey, hi there, Hassan. Nice to see you. Hassan Abdul. So yeah, actually last week, let me pull this out. All right. Okay, so actually last week I took 5 trades. So I had 1 losing trade and 4 winning trades. So same thing, also using ICT concepts. So maybe I just do a 1 recap on last Friday's trade. So last Friday's trade was actually, I would consider it very, very lucky. Was a very, very lucky trade. So over here we have the last Friday, 7 a.m. to 12. All right. So right here we have the Asian session. So I'll just mark it out. Asian session. Top center. So last Friday I took this trade. I was trying to take a long to the upside to clear this buy side liquidity. So previously, if you do a replay, do a quick replay right here. So this is how I saw the chart last Friday. I noted out these areas that price could potentially break, go up to clear the liquidity. So I'm just looking at that potential area. And then what I also noticed is that price came down and already cleared the 0.7705% the Fibonacci line. So price came down and it went up higher. So when I saw this area got broken. So I set this area as a weak. It's a very, very weak market structure shift because it was a weak WICK close. It's not a body close. So I took the chance. And tried to enter. But then I also noted down that there were equal lows lying right here. So I was just taking a risk entry for retracement. Price to continue going up, clearing the liquidity. So this is what I did. I took a Fibonacci line, drew it to the top, and I entered at the 0.5 area, the 0.5 Fibonacci line area. So I took a long position right there. Stop loss below. It was a risk entry, as I mentioned. So I was just hoping that this weak market structure shift could potentially just bring price continuing upwards. So what I did was, you can take a look. Price hit my entry, nearly continuing down, nearly hitting my stop loss. So at this stage, at this very point, I was thinking, damn, I'm going to lose a trade on a Friday. So how am I going to manage this trade? So I was looking. I was just staring at the chart. So I was staring at this specific trade for like 1 hour. I move on to the 5 minutes. I noted that my entry is probably wrong already because there was another market structure shift and it was quite strong. Market structure shift, bottom. But then, so I just removed this area out. But then with a stroke of luck, I was just watching, stroke of luck, price actually did not clear these equal lows right there. What happened next was price went back up, nearly tapped. How close was it? It nearly tapped, but it suddenly had a strong burst of energy. So looking at this very energetic movement, I moved down to the 1 minute chart. So instead of closing my trade at break even, I could have closed break even already. But a very, very strong energetic movement just made me just have a second opinion. Instead of closing fully, I wait for a second opinion. Price cleared this area. Market structure shift. It actually cleared. Price went up. And had pretty strong market, the energetic displacement moving upwards. So also noting out this area. So I'll just clear out. So my entry was here. just do it this area. So I can delete. Okay, I can delete this area. This was my buy entry. So that was the buy entry in place. So the moment I saw this happen, I start to look out that price was actually respecting the fair value gap, was pretty much respecting. Can take very, very nicely, price tapped into the gap right here and continue pushing to the upside. So I was thinking if this bullish momentum continues, price can potentially push to the upside, hitting my take profit. But what I noticed that there was a lot of liquidity resting right here. So I was thinking, what if price goes up, tap into that line and reverse downwards? So I start to frantically, in a hurry, because 1 minute charts are very fast. So I move on to the 5 minutes. I noticed that there were pretty much equal highs resting around here. 15-minute charts. Okay, was it 2 minutes? Let me take a look. Okay, so I set it roughly around here. So I was waiting for price to just clear this area, this specific area, and I took my final take profit, buy side liquidity. So this was my take profit. Where's my take profit line? Let me get this out. Take profit. So let's take a look. Price continue going up. Hit my take profit. I immediately close it out. I ended my week. So I decided to just take a small little entry. Nearly hit my stop loss. Take a small little profit just in case price decides to reject off this area, moving back to a downside and potentially not even clearing out the buy side liquidity. So I actually came back on a Saturday, came back already. Friday, I went out already. Saturday, came back. I took a look on the charts at the weekend. Oh boy, I was so excited. I was so happy that the judgment was right. Price actually reversed off that area. It did not even clear the liquidity. So let's say I just left the chart running, leave home thinking it will, having the thought confirm will take profit. I would have hit my stop loss and ended the week with a pretty bad loss. So price didn't even clear. Take a look. And then went down to my stop loss was right there. Price came down and hit my stop loss. So yeah, this was how I was managing the trade. So instead of taking full take profit, I took half. I only took half of the take profit. All right, let's exit this chart replay. Okay. Just clear out this area. Okay, since price has cleared the top liquidity. Wow, very, very strong movement. Price can just continue going up. So yeah, very nice trade. Very nice trade areas. Okay, I'll just draw a line. All right. Okay, I saw Jamilu, you actually sent in a chart. Any more charts, feel free to send it in. So let me take a look. All right. Okay, there's actually a word in place. So you are looking at the US dollar currency index. It's on the 1 hour chart. Wow, all your trades has closed now. Your take profits has been done. So your final take profit, I presume it's this high right there. Actually, it's good also to have your final take profit right there, because anything above this area right now is the external liquidity. So I'll just write it down. Any liquidity above the buy side liquidity are external liquidity. So yeah, it's very, very nice. Very nice take profit that you have done. All right. So let's take a look back at Jamilu's chart. Okay, let's take a look. It's the DXY. You're looking at the 1 hour chart. Let me take a look. All right, so you are actually taking a short on the DXY, US dollar currency index. So I presumed that you have a sell stop entry. I presume you have a sell stop entry. So actually I saw that you draw a Fibonacci line from the bottom right here. I saw that you draw a Fibonacci line from here to here. So let me take a look. So I draw it from here to here. All right. So you actually had a short entry right there. You enter a short somewhere there. So I'm just taking a quick look. Sell entry. Where's the sell entry? Okay, buy entry, change it to sell entry. So you had a sell entry in place right there. And your stop loss, I want to take a look. You actually put at the 50%. Well, 50% stop loss, and then your take profit was at the bottom, at this bottom swing low. Okay, just take a look, just have a very quick look. Okay, maybe I'll move on to the 1 hour because I'm trying to understand why you took the entry. Okay, Trung, I will take a look with your chart soon. I will give you my analysis in a moment. So I'll just take a look at Jamilu's trade. So they're taking a short on the DXY. So moving on to the 15 minutes. All right, this is how I would have entered. One thing I do not like about entering the sell entry right here, although the trade played out very nicely. What I do not like is if you actually took a short, a sell stop immediately. My stop loss, I wouldn't put it right there. I wouldn't put it right there because for Fibonacci line, this I would actually draw it from here, bottom to the top, to actually check the premium and discounted zones. So if I actually drew it to the top, you notice that the 0.5 area actually increased. And also, what do we have in the 0.5 area? We actually have tons of imbalances resting within this area. So if it was me, if I was doing a sell stop like you did, my stop loss, I would readjust it to the top right there. Why am I readjusting there? Because you notice that liquidity was taken out right there. Buy side liquidity taken out. And this area, we have a pretty nice fair value gap has been taken out. So you can expect this small little high right here not to be broken. So actually, if you set a sell stop loss at the top right there. So your risk to reward would still be in a negative, but it's fine. Some people, I do know some people who actually do very well in trading with a negative risk to reward ratio. But for beginner traders like most of us, at least try to aim for at least 1-to-1 or 1-to-2 risk to reward. All right, so I'll show you how I would have entered if I was trading this pair. So I'll not be using a sell stop. So this is how I would have done. I would have looked at this area. So you actually look at this area, price. Where did price go? Where price actually cleared all the way, clearing the buy side liquidity. And this, what was this area? This area was the last area that caused price to break structure before it continued breaking down, going towards the downside. So I would draw a line and set an alert. I'll probably set an alert. Market structure shift has been activated. So price over here, it formed what is this area? A lower low has been formed. So, and this area, lower low plus liquidity sweep. So always watch out for that kind of areas. So liquidity sweep And then since this is on the 15-minute chart, you would have more than enough time for a retracement sell entry into the fair value gap, stop loss above, and all the way down to your initial take profit area. So in such a situation, you would have a pretty nice 1 to 2.61 risk to reward. So yeah, this is my take on the DXY if I were to trade that specific pair. Alright, so let me get back to Trung. Alright, so since this is a learning session, live trading session, pretty nice. Trung. Okay, Trung, you were entering a short. Okay, may I know what is the green color area, the green color box, light green box, so we can, try to improve your trading. All right, Trung, you also said, unlike last week's aim, you suffered big loss not just due to lot size, but also from short-term breakouts in the cable, probably the same in euro dollar. So this was on GBP USD on the 1 hour charts. All right, so let me take a look. Also, due to fear, I missed out this bullish spike just happened from this late morning. I wonder if FOMC stress could slow down the euro dollar short-term dovish recent structure. All right, I just looking at that, since there are no major news today, this is most likely a consolidation breakout earlier on today. So just looking at your trade from last week, I'll just take a look at the GBP USD. Okay, let me turn on the chart. So you actually took a short. All right, so you actually took a short right there. Took a short somewhere at 1.18571. So where's my short? 1.18571. So you had an entry somewhere there, and your stop loss was above there. So what was your, if you don't mind me asking, just send in the Q&A. So if you are open about it, don't mind me asking what is the account size you are using and what is your lot size. So maybe I can help to reduce your big loss and help improve your risk management. If you don't mind, you can send it in Q&A, so it would be private, no one can see in question and answer. Or if you want, you can feel free to send it in chats. Because actually with proper risk management, you wouldn't lose so much on your trade. So I can help you with that. So you were aiming a short to, okay, you took 0.5 lot for $800 accounts. Okay, let me take a look. Wow, okay, let me take a look. Where were you aiming? You were aiming for 1.17137. Let me just draw it out. 137. Okay, you're aiming for that specific level. Let me check. Is there anything there? Okay, pretty nice actually. There was a equal low right there. You could have potentially aimed for that. Okay, just looking at your charts, what I like to emphasize is if the overall trend, so if you're looking at the 4 hour chart, the overall trend is bullish. Overall trend very, very bullish. Please do not try to do a counter trend trade. So if it's going for a short, yes, you can continue shorting your way down and try not to buy. If there's a buy, try not to buy. So yeah, for me, I'm a trend following trader. So you wouldn't see me doing a counter trend. So for euro dollar, I'll just be waiting for it to retrace and then I take a buy. But in this specific, I guess you were trying to catch the reversal. Trying to catch the reversal to the downside, but it was on trending market. So maybe that could have been avoided if you didn't trade counter trend. And also, you are doing a 0.5 lot for your $800 accounts. Okay, let me do a calculation. Just a quick one, help to diagnose your idea, diagnose your risk management. So you actually risk 170 pips on your $800 accounts. So that actually means, type it out. And your risk was 170 pips. Okay, this can be this is a problem that I can diagnose and help you fix right now. So in such a situation, you were aiming for a 1 to 0.85 risk to reward. So the first thing I would state is what is wrong. Things that went wrong. So I'll just diagnose this out for you. Things that went wrong. One was a counter trend trade. And how many pips were you aiming for this counter trend? You're aiming 150 pips. So it's quite a lot. Counter trend trade, 150 pips. That was one of the mistakes. Second mistake that could have been avoided was the risk management regarding lot size. So that part I can help you. And the third is, was there a reason you were looking for a short? That you were looking for a short to the downside? So in this specific scenario, let me whip out the calculator. 170. So if you actually left it running to your full stop loss, you would have actually blown the accounts. So this is not to shame anyone. We can learn together. So it's fine. So how would I recommend you to manage your risk? So I would usually risk how I manage my personal account. I risk 1% a trade. 1% risk per trade. So 1% risk per trade. Let's say same situation, $800 account. 1% risk is equals to $8. So in such a situation, you will count 170 pips. 170 pips is 10. One pip is 10. Okay, let me take a look. 170 pips. If you even enter 0.01 lots, it would be $70. $17 7 pips. 0.01 lot size. Risk $17 equals to 2%. So yeah, just take a look. So you're actually risking 170 pips. If you actually entered 0.01, you would only have lost 2% of your account in this specific scenario. So for me, I do not like it when a trade is over 100 pip stop loss. I'm looking at my maximum for better entry, usually 25 pip stop loss at the very max, 25, 30 pip stop loss. So if you actually draw it out, let's say your account. So yeah, I think you did not calculate the proper risk. You did not calculate the proper lot size. So that resulted in the very huge loss right there. So yeah, it just reminds me of back then on a $400 account, $500 account, I was using one lot. So why one lot? I was aiming $400, one lot. I just aimed 10 pips. 10 pips is equals to $100. So I was thinking, wow, $400 doing one lot, Monday to Friday, every day catch 10 pips. I'll make $500 a week. And 1 month it will be $2,000. So I was just imagining that kind of scenario in my head. So I recommend you guys to please use 1%. So let's say if it was, let me change it out. Let me change the situation. So let's say if it was a 25 pip stop. So you take your risk. How do you calculate that? Lot size is equals to your risk divided by the number of pips. So it's equals to $8 divided by 25. Let's take a look. What is the answer? Let me get my calculator out. So it's 0.32 divided by 100. All right. So you get 0.03 lots. So actually you get, so if $8 divided by 25, you get 0.32. But 0.32, you divide it by 10 one more time. 0.32 divided by 10 equals 0.032. But round it up to 2 decimal places. So you get 0.03 lots. And you are only risking 1% of your account. So entering 0.03 lots at this specific cell, at the cell right here, if price goes up, you only lose 1% of your account. So that's how I risk 1% of my accounts. But at the moment, I'm actually doing a challenge. I'm doing a challenge where I'm doing a proper risk management. So I'm pretending doing a, like a fun challenge right now, FUND. So I'm treating my $1,000 account. I actually created a new account, a $1,000 account only. And I'm treating it like it's $1 million account. Because if I'm able to do that, I can handle $1 million. So what I'm doing right now, the way I risk it is, so you just take a look, 1 million. Just a quick explanation. If you guys, have more money to put in and why percentage is very important. 1 million accounts. So you aim for 1% per week, 4% a month. How much is that? It's 40,000 per month. And that's only looking at 1% per week. So you aim 4% a month, that's $40,000. I'm sure you can already make a living on that. So the way I do it now, I'm actually risking 0.02, 0.5% risk per trade. So this is how I'm handling it right now, 0.5% risk per trade. So on my $1,000 account, the maximum lot size I'm entering, regardless, it's 0.05, just to get that 1%. So I'm just playing it small, doing it small. So I'm just doing a challenge to prove, just to prove that I'm able to handle this 1%, having a high win to loss ratio, so that I'm able to get funding to handle a bigger account. So this is why percentage is very, very important. Don't try to. A very, very big issue with most retail traders is a very, very hard truth. If I want to say very directly, most of you guys do not have much money. So I know this is not something that's not right for me to say, but it's the hard truth, hard reality. So let's say a trader, he wants to make a living out of trading Forex and he's using a $10,000 account. How much do you need a month to survive? Let's say you need $2,000. Let's say $2,000 to survive monthly. $2,000 to survive monthly. So $2,000 out of $10,000, that is 20% per month. Every month you are aiming 20%. You're trying to increase your account 20% monthly. And then that also means your risk has to be doubled or even tripled to even hit that specific amount, $2,000. Let's say, just an example, $2,000 to survive. But you put into perspective, put into a very, very strong perspective. A bank, how much are they giving you per year? You put your money inside, you relax, you sit at the corner, you do nothing. Bank is giving you roughly, I just give a quick estimate, bank, 2% per year. So if you park your money, let's say $5,000 or $10,000 a year on fixed deposit per year, it's giving you, right now the rate is quite high, so it's giving you around 3% per year, 3%. A bank per year, 2%. So think about that. The moment are you trying to beat a bank? You know, you're beating a bank, you're greatly trying to fight with a bank. So if you're able to generate 20% consistently a month, you can actually go and trade for, you can go to a fund management already. Fund management firm, you know, those type of big banks, they want you already because you are able to generate 20% a month. So per year, how many percentage are you generating just for that $2,000? So 12 months a year, 12 times 2, you are generating 240% returns per year. So there's a lot of retail traders are actually, they are not taught to look into this perspective. The moment you are doing these huge percents, banks, management firms would be after you already. So you are aiming very significant amounts, very huge amounts. You are beating them, beating the banks, hedge funds, fixed deposit, all these managers by a very significant percentage. So think about it. What if you follow what I'm doing? I'll just clear out this. So let's say you do this. 12 times 4. That's why 1% is important. So take a look. Ignore, just focus on this specific area right here. If you're able to do 1% of your account per week, $1,000, you just up $10 only. 4% a month on $1,000, you're up $40. And if you're able to do that consistently for 6 months, even on $1,000 account, you have the MyFX book open, it's slowly going up per week, 1%. You're actually doing 48% per year. You are already beating the bank, who are giving you only 2% and a fixed deposit only 3% per year. The fact that you are doing 1% a week is already very good. You have already beaten them. So please keep that in mind. Doing 1% a week, you are beating them. You are beating them in trading. So if you are able to do this specific thing on $1,000 account, what is stopping you from doing a $10,000 account, $100 account, or even $1 million account? So $100,000, you can do it. It's the same thing as long as you are consistent. So you can actually use something called my FX book. So you can use this website, my FX book. You can connect your MetaTrader. You can start to see your portfolio. How is it doing per week? How well are you doing every week? So yeah, please set that into perspective on the power of 1%. 1% is very powerful. Let me add this in. Fund management firm will be begging for you. Okay, let me screenshot this down. So I'll send it to chat. So yeah, so far, do you guys, have opened your eyes to what I just mentioned on why 1% is very strong, the power of 1% per week? Right. So please do not, please do proper risk management. Please count 1%, try to use 1%. I'm sure if you are consistent, you are able to do larger and larger accounts, and very soon you can, I'm hoping all of you guys can, eventually make a living out of trading Forex, trading stocks. I'm sure that is every trader's dreams. Hey, yeah, thanks, Arius. So yeah, this perspective Instagram gurus do not tell you that. They do not tell you that if you are aiming 20% per month, you're actually, well, you are just doing 240%. It's crazy, man. You're doing that, fund management go to your door already. They knock on your door, they beg you to come and join them. Goldman Sachs, we have already come. We have come to you, begging you to join their firm, turning their $1 billion into 240% to 2.4 billion. So yeah, please exercise proper risk management in trading. So if you can do this properly, why not? You know, all those something like FTMO, you know, some FTMO, all these, you guys can go ahead. Once you guys are consistent, you can get the funding. So by then you can start to do 1%. So if they provide you a $500,000 $500,000 a month, $500,000 account, 4% a month on 500K, it's 20,000. And they give you a 90% profit split. So 20K on 500K accounts, they are giving you $18,000. This is just on doing 4% a month. Aim it, try to do 1% per week. Try to build that, you know, that, what do I call it? That discipline, that very, very strong. It's very difficult. It's a discipline. Yes. Try conducting it. It will take a lot of mental consistency, but push as a defense mechanism. Yes. It's a mental game. You are playing this game with yourself. So when you hit 1%, do you want to go back to the charts? Sit down, use your finger, you know, press on the mouse, buy or sell after you have hit your target 1%. Do you want to risk that? Blowing your entire profit for the week? Or do you want to have that mental game with yourself, that discipline, building that discipline, and leave the chart for the week the moment you have hit your target? Discipline in trading is more important than whatever technical analysis that you guys can do. So no matter how good your technical analysis is, fundamental analysis is, with no discipline, you can just be a break-even week or even a negative week. And I'm sure areas you can understand about, you also can understand on the discipline on trading, on the trading times, because you've been through the ICT course, the free course they have on YouTube. So ICT also says you trade during the Q zone timings. So trade only during the London session and the New York session. So also just by limiting yourself to certain sessions, London, New York session, your hand must have that very, very strong, discipline not to click, not to look at the charts between those hours and try to trade. So if need be, your hand really, really itchy, you cannot take it, cannot take it, open trading view, trading panel, you can do paper trading right there. You can press connect. You can do paper trading during the Asian session, Try not to over trade. Also, do limits yourself to how many trades you guys are taking per day. So let's say you in a row, you already hit, let's say 3 winning trades a day. Do you want to continue pushing your luck? So after 3 winning trades, you think you can go 4, 5, 6. That is already pushing the luck. So for me, if I have 2 winning trades a day, I'm already out. I just leave the chart. If it's 1%, I'm out for the week. Okay, Jamilu, you actually sent a chart. Let me take a look. So you're looking at the USD JPY, you're looking for a sell. So you have a sell limit in place. It hit your sell limit, your stop loss is right there. And you have a first resistance, first support, second support line. You're looking for price to head towards the first support area for your take profit, which is in line with the 78.6% Fibonacci line. So you're also using the Ichimoku cloud. I'm looking at that. So with price being under the Ichimoku cloud, this very, very green cloudy thing right there, with price being under the Ichimoku cloud, it indicates a bearish market. So yeah, let me take a look. You actually sold it on the, what time frame is this? Is this on the 1 hour charts? do let me know what time frame is that. I don't think I can. Oh, it's a one day chart. I saw it. USD JPY. Looking at the daily. All right. So you actually took a sell. The moment price somewhere around here, you took a sell. Sell entry. Okay, nice. You are actually in profit at the moment. Sell entry. Where is your stop loss? Okay, I saw you set your stop loss at this specific candle right there. Is there a reason behind that? Stop loss. Your stop loss was slightly above that with your take profit at the roughly this area. So I roughly saw it's around here. Your take profit. All right, so you are looking for price to head to the downside. Okay, is there a reason why you took the sell? So you actually took a sell limit, price came up, you're continuing to the downside. So let's take a look at the 4 hours. 4 hours. Just a quick look. Price came down. The start of the push down. OTE. Price didn't even come back up to the 0.5 area. So let me take a look at the 0.382. The price almost tapped into that area, but it did not. It continued pushing to a downside. It still did not tap into the 38.2% area. So if I were you, I might want to take partials. Where do I want to take partials? I want to take partials if when the moment price just broke this area. Because this is what you call anything outside of this range. It's your external liquidity area. So external liquidity, if I were you, I would have just taken partials right there, just in case price rebounds. Where can it rebound to? I don't know. So you can take partials just in case price decides to retrace back upwards to the 50% area. By then you would have been in a, already in a negative since your sell entry was right there. So yeah, please do manage this trade. So yeah, I can see this trade is very nice. Please set break even by now, because if price breaks above this area, traders can start to look for a potential buy to the upside already. Because in this scenario, this would have been a market structure shift, and then it would have hit your stop loss. So yeah, this is just a scenario that you might want to keep in mind just in case. But yeah, if you take partials here, the New York session comes, the bearish momentum continues, it can hit your final take profit. But nice trade. It's cool to see everyone having different trading styles, different trading methods, and it still somehow works. All right. Pretty nice. That's a nice trade, Jamiru. All right. So yeah, any more? No problem. So yeah, any more questions you would like to ask me before I end the session? So after this session, I'm going for dinner already. So yeah, quite hungry, going for dinner after this. Any questions? Do let me know. All right, so I'll give you guys a bit more time for you to type out your questions, just in case anyone is still typing. All right, okay, if there are no further questions, okay, do you mind giving the outlook on Euro or GU? Sure. There's a quick one, Euro on the Euro dollar. So in this specific situation, okay, let me change it to the other Euro chart. So in this specific situation, we are looking for Euro to possibly hit the daily. Is there a daily? Yes. The daily supply zone right there, which is at this on the daily chart. So your first resistance area should be this buy side liquidity resting right there. So I'm expecting tonight for the New York session to continue pushing price up and clearing out this area, tapping all the way. So that is for EU. This is on the daily chart. Because also right here, price has also cleared the fair value gap. So it went in, tapped, and continue pushing to the upside. Or Arius, you ask how can you reach me? Can you use TradingView to send messages? Sure. Please send your chart. If you're asking me anything, please send a chart. So actually send the link to my profile right there. So yeah, I was pretty fast. So one month ago, one viewer actually gave me the idea of doing a TradingView. So I started with 1 follower. So 1 month later, quite a lot, not bad. So I really thank you guys for giving me the support to reach that follower count. So I'm aiming to reach 500 followers by December. All right, back at Euro, GBP, USD. Right. GBP USD, where can price possibly head to next? Okay, just looking at the very quick on the weekly. What do you notice? What's your weekly expansion bias? My bias for the weekly is for price to continue bullish, pushing to the upside. But where can it head to? There's so much liquidity resting right there. So much, I can just draw a line. There's so much to clear. Buy side liquidity and buy side liquidity right there. There's so much area. Very nice to clear. So maybe if I draw a Fibonacci line from the top to the bottom. Okay, quite nice. Price is currently approaching. So our first area of resistance is probably this 0.5 area. So I draw from the top to the bottom. So the 50% Fibonacci area, price can tap into this area, your first take profit, where we can look for possible shorts since the overall trend is short. So you can look for price to go down, head up to that area and have a slight reversal for GU. So yeah, that's about it for GU and Euro dollar. Any more questions, do let me know. Any more questions? So let me... Okay. All right. Okay, if there are no further questions, we have come to the end of the session. All right, pretty nice. Come to the end of session. Okay, thank you guys for joining me today. Thank you for joining again. Thank you, Arius. Thank you, Hassan. Thank you, Jamilu. Thank you, Trang. Thank you, Zoran. As usual, thank you to my regulars for joining, always, supporting, giving the support. Hope you guys, have a better trading week this following week. And please do not give up. Zoran, you can do it. You can do it, man. Trang, you also can do it. And Hassan, if you are trading, please let me know any trades in the next session. Maybe we can talk more, get to know each other more. Hey, Zoran, please do not lose all hopes. Please do not. If you have any, charts, do send it over. Because it's easier for me to reply to charts than, fundamental news events. It will take me a while. So yeah, please send me charts. Do not lose hope. You can do it. Maybe spend some time, resting, back testing. Please use the backtest function, the backtest replay function on TradingView, so you can actually push back, and test out the method that you are aiming for. So yeah, without further ado, bye guys. Really, thank you very much for joining. Bye-bye.